Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. This is important to the thesis of the channel. That's why I cover it every single month when they release it. This was released January 6th, 2022. It's the December 2021 Monthly Housing Market Trends Report. This is what I use to follow how real estate's doing. So let's go over some numbers here. Jumping in here, it says the national inventory of active listings declined by 27% over last year, while the total inventory of unsold homes, including pending listings, declined by 16%. The inventory of active listings is down 57.1% compared to 2019. You can't have inventory go down 57.1% and have real estate be in a bubble. I'm sorry. So anyone who thinks that real estate's in a bubble, we have to see inventory numbers increase. You can't draw down your inventory by 57.1% and be in a bubble. So we'll look at, this is the active listing counts for December. They were down 26.8%. We are compressing the inventory into non-existence. It means we have less and less inventory that is active to buy than every single year. House prices are going to accelerate if this trend continues. We have to see the trend reverse massively for a housing market to be in a bubble. So no bubble, guys. I'm sorry. We've got newly listed homes down 6.1%. And this isn't that great of a metric, to be honest. This is really the one that is the big one for me, is active listing count. Homes are selling 11 days faster than last year. So days on the market is declining, and that usually happens when a market is out of balance. There's too many buyers and not enough sellers. This market is super hot, and it will remain hot until inventory comes online. There's too many buyers to sellers. And the median listing price, with the declining inventory and how fast that inventory is moving, continues to rocket higher. Now, there's some people out there that said, well, in June and July, it peaked and we've come down in prices. These people don't know real estate, apparently. It's done that almost every single time the past 4 or 5 years. It's a seasonal thing in real estate. And it's quite frustrating and quite annoying to hear all of these people talk about this big housing market bubble when you have no inventory to sell. At some point, it will peak, but it peaks when inventory goes above 6 months of inventory. We've been drawing down inventory, not putting into it. So, in my opinion, we are going to see home prices continue to go up at, I think, a pretty good rate. And if I were to take a guess, I would guess between 10 and 20% is probably my guess. And you know what? It's possible that some of these cities go up over 30 or 40%. It really depends on their inventory and how many people are moving there. But those are the best in the nation, and they're outliers. 10 to 20% would be my guess for the majority of homes in relatively good areas. Obviously, there's going to be ones that are going to eat it, probably those of Democratic states like New York, something like that, perhaps, where everybody doesn't want to live. But that is what I'm seeing in the market. If you come down here and you look at the median list price year over year, I mean, Austin's up about 30%, and that's kind of where the hot cities, I think, will be this year even. And I understand a lot of people and their inability to understand how this is happening. And I'm going to tell you something. This is going to drive an expansionary phase of real estate Expansionary phases have more new loans coming into existence, which is inflationary. What are we seeing? Inflation. It's exactly what I was describing at the beginning of this channel when I created it. This is going to support higher commodity prices and precious metals prices. It's all intertwined. This is the driver of it all because this is going to impact interest rates. And interest rates is what sets the pricing of all assets. This is the driver. You're in the reserve currency and home prices are going up, which is going to mean higher interest rates. The home prices are going to continue higher despite higher interest rates. The demand for loans is going up. And we're going to see higher rent prices, more inflation, and people are going to be put in bad situations where they're going to have to pay a lot in rent. And then they're going to say, you know what, if I'm paying this amount in rent, I might as well go buy a house. And a lot of people have been doing that. Our neighbor did that. They decided to buy a house after their rent increased quite dramatically. I think their rent went from $2,000 a month to $2,400 a month. And now they're looking at even higher rent prices everywhere here. They continue to go up. So that's my viewpoint on this. I don't see how I'm necessarily wrong. And the way that I would be wrong in the housing market is if a whole bunch of inventory were to come online all at once. I don't know where it's coming from. And anyone who is in forbearance or something that happens there, and they lose their house, you wouldn't foreclose on it. You would just sell it because you have equity in the house. You'd get the equity and you'd be okay. So I don't see why everybody would just, they'd sell their house, but I don't see why people would foreclose and give it back to a bank unless they went into some forbearance where it doesn't allow them to sell the house. I don't know. But this is strong, very strong numbers. Real estate looks absolutely excellent. I would still be buying real estate if it were myself and I wanted to buy another house. Inventory is still drawing down. I see no signs of a top. Absolutely nothing. So if you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.